I'm James Twomey, and welcome to the Twomey Stock Market Report. It is now Wednesday, 11/30, 2022. I want to catch up and give you a little bit of an update what's happening today and what's next. So let's get right to it. We are on the cusp of something really changing. I'm going to give you a quick insights on market fundamentals, what's next, sector breakout, and some potential trades. But I want to first leave you with this. Today, we waited all week for two things. One, we're waiting for the end of the month shuffling by fund managers so they could prepare for the incoming money from the 401k distribution starting the first, second, and third of the month. That's when they need to put that money to work. Since we have high employment still, people are still working, they're still contributing to 401ks. Typically, it'll bring a short bounce to the market. We like to get in a little bit before that. We did wait potentially too long because today the Fed came out and reconfirmed that they're going to slow the rate increases. When I say slow, we all knew they were going in at 0.5 coming December. It was pretty much baked into the stock market. We do know the first quarter next year they're going to continue raising rates, and qualitative uh, tightening is going to continue, but much lower rate increases. And the Fed basically came out today, hey, we're seeing employment coming down. We're seeing some headwinds on the economy. We don't expect it to be a major recessionary situation, but they are going to continue with their rate hikes at lower numbers. And that just made the market take off. And obviously, the Dow was up over 740 points today. So, we were down 300 most of the day yesterday, the same, and now we've got it all back in a matter of a few hours. So that's a good sign. So, we got to take a quick look at our sector table. If you listen to if you subscribe to the Twomey Stock Market Report, that's the number 2, mestocks.com. Every weekend we come out with a 20-plus page report, fundamentals, technical analysis, what's happening in the market, what we project going into the market, and we review some of our trades. We also talk about the sector table. So the sector table, we always look at this from like the 1 month close, right? That if you go straight down here, and materials are playing high, we're going to go over that. But if you notice, just recently, consumer discretionary communication services, financials has been up there. Industrials were near the top. Now they're kind of middling. We've got utilities coming up off the bottom. But if you look at the bottom here, healthcare and energy is coming down. The price of energy is coming down. That's going to help the inflation numbers. And even though we're going to have inflation for quite some time, if we can get it leveling out, I was talking to an economist today, and he was saying that yes, inflation, even if it stays high at these numbers, but it doesn't continue its increase month over month, then everything tends to gradually catch up. Spending habits, pay, as long as people stayed employed. And that's the key. So what's going on there? We've had the 4 legs of our recessionary and bear market that we always watch. We look at the yield inversion, which has been going on most of the year. We look at GDP. We had 2 negative quarters of GDP, and now we have 2 quarters that are coming, the last couple of months that they're positive. So that's reverse course. We also have the PMI, the manufacturing index. We watch that very closely. We had a flash from Chicago PMI that came out today. It said it was going to be 45 or 47. That's below 50. Anything below 50 is a contraction. And manufacturing means it's going to be layoffs. We're not going to get the full number until the early next week. And then we'll be able to, month we had the same situation. At the end of the month, we got that flash below 50, but it ended up at 50.4. So we're on the cusp there. If that comes in under 50, manufacturing sector is slowing down, which is a surprise, but also we saw our industrials drop in our sector table here. But what does that mean? It means inventories are going to start building. That means potential layoffs. And the last leg is the unemployment. If employment ticks up, that's like the 4th leg on the stool that really collapses, and we go back into this bear market recessionary trend. The latter, that has not really happened yet. Employment, ADP had some lower numbers today. We'll see with the employment report coming out at the end of the week. Bottom line is we haven't, other than high tech, we're getting a fair to middle on the hiring sector. It hasn't really collapsed yet. Sure, housing market, et cetera, in those areas, are losing jobs. Certain high techs losing jobs, but the infrastructure bill and the chips bill and the energy bill is all throwing trillions of dollars at the economy, and it's somehow going to put people to work, right? So we've got that balancing going on, and we'll see where that goes. Uh, you know, like I said, TwoMeStocks.com. Go to that website, the number two, MEStocks.com. We've got sign up for a trade tracker. You get our weekly market report, all the information, and we're going to go into detail this week about it. We also really get you real-time stock alerts. So what am I seeing here? All right, we use the diamonds, which is the Dow, for the Dow Jones proxy, and that's been leading the charge. We're up to above. We finally broke above the bear summer market rally highs back in the end of August. And today we saw that massive buy with a lot of volume. We're way above on the 50, the 200, we're now into our Midland numbers, the 9 EMA, 14 and 20 EMA. So, we had crossed down towards our first sell signal between the 20 and the 14 EMA, but we've rebounded nicely. In addition to that, if you look this circle here, we've got the 50 EMA exponential moving average ready to cross the 200. Why is that important? Technically, it's a lot of algorithm quant trading is going to kick off. It's called the golden cross. It doesn't necessarily foretell that the market's going to race up and go forward, but it is a positive sector. We've been negative all year since, April, beginning of April, end of April, where the 50 crossed below. That's called the death cross. When it crosses below the 50, crosses below the 200. It doesn't guarantee a recession or bear market, but it does tell you that market pressure and stocks, most likely will come down in that particular sector or stock that you're looking at here, in this case, the Dow Jones. In this case, yes, it did. Last week's Twomey stock market report went into a lot of detail, all the history on that, when it actually caused a bear market or a recession and when it did not. So there's a lot of great information there to help you. But in this particular case, it certainly did cause a bear market. Why I'm bringing that up? Because I'm going to show you a couple of things. This is the Dow Jones industrial sector, right? Pretty much industrial companies, top 30 in that area. So I've got this sector, the XLI, which is the industrial sector. And in that sector, let's take a quick look at that, is a variety of companies. XLI is a portfolio of the top 10 holdings: Raytheon, Honeywell, Union Pacific. So right there, a defense, an industrial, a railroad, United Parcel Service, a delivery, General Electric, Deere, Boeing, Northrop, Caterpillar. So a lot of big companies with good balance sheets, low PEs, performing well, benefiting from this infrastructure deal. Raytheon benefiting from the arms that we're sending over to Ukraine, and now we're going to replenish and so forth. So why do I bring that up? Look here, the 50, we've been talking about this for a while. The 50 did finally cross above the 200. Sure enough, the market's racing out. We're above that bear market rally. We should be able to get, well, I'm not in a prediction business, but it does foretell that it may get back up to these highs back in April, which would be very, very positive. RSI on this, relative strength index, another technical that we look at is 67.7, pretty high, edging towards overbought. So that's been that way for the last 10 days, been high and it's been sideways. But now's the time. It's a signal we should follow. And I would say the industrials, Dow Jones, we should get long. If you're not long, you should get long. Also, too, materials. XLB is another one. That's a variety. When we think of materials, we always initially think gold, copper, silver, right? No, this is Lind, Air Products, Sherwin-Williams, Ecolab, Nucor, Newmont Mining, Dow, a whole host of material-based companies, if you will. and chemical companies. So that's a really good sign that that is taken off. Here, let's take a quick look. The 50 has not eclipsed the 200 yet. It's getting near there, but it hasn't gotten there. Again, been sideways for almost 2 weeks, but now we're potentially could break out and maybe get up to the the last April high, uh, June and April highs. So that would be very, very positive. So we're watching that. Another one you should be going along. Let's go to the SPY. We use that for the S&P 500 proxy, that ETF. Look at that. The 50. See the gap here between the 50 that is in the fuchsia color and the blue is my 200 EMA. Again, this is more of a technical analysis, folks, but the net of it is there's a lot of gap to be filled there. If we can eclipse, just like the Dow, and it follows the Dow in the industrial sector there, and it starts raising up there, we're looking to get back up into the bear market summer highs. So that's another 30 some odd points, 10%. We look at IWM small caps that had been doing well along with the Dow, but the past 15 days really sideways and didn't get much traction. It really leveled off. Same thing, 50 needs to get up to that 200. We got a ways to go. There's another sector you should be going along. We're going to look at QQQ, the NASDAQ ETF. That has been a lagger, and this is a really busy chart here, and I apologize for that. But here, this fuchsia, let me see if I can highlight. There's the 50. We're just barely getting the price above there, and the 200 is way up here. That's got a long way to go. If the NASDAQ can light fire and take off and regain, even though with all these layoffs going on and not benefit from these government stimulus, if we can get that ignited so that the Dow can continue to pull up the rest of the market, the S&P 500, the small caps, and the NASDAQ, that's going to foretell us that the market has got strength going into the rest of the year. If you get to the Twomey stock market report, there's more. We go over. We flipped our bond ETF positions. We're enjoying some solid gains there. If you go to that market, the website, the number 2 mestocks.com, you can sign up for the trade tracker. You can get, our newsletter reports. All the information is there. You get real-time alerts via email. You don't have to worry about what's going on in the market. We watch it. We've got all the folks, analyzing our trades. We've got alerts on when to buy and sell, real time, coming right to your desktop or your iPhone or what have you. So I'm James Twomey. That's an Insight Today Wednesday, and that is Wednesday, November 30th, 2022. Tomorrow is the first of the month. We expect the market to continue. If we wake up and the futures are way down $300-400 points in the Dow, reverse course. But right now, you should be long. You should be adding to your positions. I'm James Twomey. This is the Twomey Stock Market Report.